Hi, we are here today with Maria Rees, CEO of Stride Equity. Lovely to have you here with us today, Maria.
Thank you so much, Rida, for having me.
Brilliant. Now, as the CEO of Stride Equity and with your experience in optimizing exits, what key strategies or factors do you believe contribute to successful exit for startups? Let's start with that as like our first question.
So we at Stride Equity look at companies and how they develop their exit strategies. And we really want to understand that at the early stage, they consider their own exits, but also before we invest, we would be considering an exit of our own investment. And it's really important to look at the timing of an exit, of course, but also where in the growth trajectory this company is. Ideally, we would like to maximize the valuation of a company. So you would want to be in a position where you're in a maximum profit, revenue, the best customer position, everything is working really well with your company. And finally, we really want to make sure that the human resource aspect, like you've got a really good board, you've got a really great management, you've got a very stable company. And that's very attractive for a potential buyer, whether it's an IPO and you've got retail shareholders or whether it's an acquisition.
Amazing. Now, from my second part of the question, can you tell us your thoughts on how can entrepreneurs and investors work together to maximize the exit opportunities?
So it's very important, in fact, to align the interests of investors and the entrepreneurs, the founders of a business. In fact, no successful exit can happen without that. So it's I think the onus is certainly initially on the founders to ensure that they bring along their investors on the journey of how they wish to exit, how everybody's interest is aligned, how they're going to look after that investor's interest in that whole process that is what we call exit. And if it's an IPO, for example, you need to make sure that the investors understand that they're going to get a liquid asset, but perhaps their shares will be escrowed. So for a while, they may not be able to sell it. So you need to bring along, as a founder, as an entrepreneur, it's the onus is upon you to ensure that you bring along your investors and all your stakeholders, your employees as well, frankly.
Yeah, absolutely. Now, being the CEO of the first venture-backed equity crowdfunding platform in Australia, what advantages do you actually see in venture-backed equity crowdfunding for investors and entrepreneurs, and how does it impact the exit strategies and potential returns?
Look, we invest our own capital. We're a venture-backed crowdfunding platform, and our venture fund is actually funded by ourselves, the founders of the equity crowdfunding platforms. Therefore, we co-invest with the investors who are funding the companies. That's really important because we are all investment professionals. So not only the investors can have confidence that the investment is a good investment, but they can be assured that we look after it like it was our own, because it is indeed our own.
Yeah, absolutely.
We invest up to 20% into any company that we raise money on a crowdfunding platform. So this is a really important aspect and a really important difference between other crowdfunding platforms where you don't have the principals investing together.
Definitely.
In terms of exit, I mean, we determine and we assess exit opportunities at the time of investment. So when we invest in a company, when we put a company on our crowdfunding platform, we would do it on the basis that we would already understand that there's a feasible exit out of that investment. Some investors are happy to hold a private company for 7-10 years. Certainly you see that with venture funds. At Stride Equity, our horizon is 3 to 5 years. And so we want to make sure that our investors who invest in these private companies will have an exit opportunity with a definite time horizon. So we want to make sure that that happens.
Now, are there any unique opportunities or trends that we should be aware of other than, health and wellness?
Look, at the moment, I think the very big opportunity on the market is in pre-IPO funding. The IPO window is completely closed right now, certainly for small to medium-sized companies. There are some really good quality companies, very good valuations, and very good terms that people can have access to. Certainly investors can tap into those opportunities now. whether it's through Wholesale Investors platform, whether it is through Stride Equity,
Right.
you can tap into these opportunities where you can invest in these companies with a potential exit of 2-3 years once the IPO market returns. So it's a relatively short period of time and potentially really good investment returns.
Amazing. Now, before I let you go, Maria, it is great to have you here today at the Capital 2023 conference as one of our esteemed speakers. So what has your experience been being at the event today?
Oh, it was lovely to see the different companies and different opportunities. I think the beauty of this conference is that you bring together all sorts of industries, and investors can have a really good, broad review of what's available in the private company market.
Right.
And you can look at property opportunities, AI, look at through healthcare. So it's very exciting
Quite
to watch the
diverse.
companies.
Perfect. Well, thank you so much, Maria, for being here with us today. It was great to have a chat with you.
Thank you so much, Sridham. It's wonderful to be here.
Thank you.